Hello, and thank you very much indeed for taking the time to watch our introduction video to VSA, the Smart Money Tracker for MetaStock. My name is Gavin Holmes. I'm an author, I'm a trader, and I'm the CEO of TraderGuider Systems International. I'm very pleased to announce that we are launching a new special volume spread analysis add-in study for the MetaStock program, and I'm very pleased today to spend between 15 and 20 minutes with you showing you this and explaining to you the principles of how you trade in harmony and not against the smart money. This is my book. The book is called Trading in the Shadow of the Smart Money, and it says use volume spread analysis to understand market manipulation and to read the charts like the smart money do. If you wish to find out more, I have a website. You're very welcome to go and log in there and download the first 4 chapters of the book with my compliments. The website is simply www.tradingintheshadow.com, and will give you an overview of what I'm about to show you in this short presentation. In this book, I describe why the markets move the way they do, and I discuss in detail trade setups that show when professional money, or I call them the smart money, are actively selling to the public or buying from the panicking public, because the markets move on the principles of supply and demand, cause and effect, and effort versus result. TraderGuider has today partnered with Thomson Reuters MetaStock to bring you a powerful study that I'm about to show you that will help you identify when fundamental analysis is not going to help you, when technical analysis may well mislead you, but when you see the smart money participating or not participating in the market, you will have an opportunity to become profitable by trading in harmony with their moves and not against them. So the reason we have partnered with Thomson Reuters MetaStock is for one key objective: to show you that the Smart Money plugin for MetaStock will teach you how you can profit by understanding why markets are manipulated, and then how to identify the footprints on a chart to trade in harmony with the manipulators. So let's start with the concept. What is volume spread analysis? At its core, volume spread analysis, or VSA, is a methodology based on the original works and teachings of Richard D. Wyckoff, a trader in the early 1900s. The methodology seeks to establish the cause of price movement on a chart. The cause is simply the imbalance of supply and demand as the market trades, resulting in strength or weakness in the market being charted. For the correct analysis of volume, you need to understand that the recorded volume contains only half the knowledge required for a correct analysis. The other half of the knowledge is found when observing the spread or the range of the price bar and the closing price on that bar. Volume indicates the amount of activity on the price bar, and the spread or the range of the bar shows what the price actually did, and most importantly, where the price finally closed. Volume, spread, analysis. Many retail traders do not understand the power of reading volume. And we have produced a study for MetaStock that reads this volume. But what is volume? Volume is activity. It's the activity of the professional side of the market that move the market. Very high volume tells you very high activity is going on, i.e. lots of trading. Low volume tells you lack of activity is going on from the professional side of the market, or what I call the smart money. The plugin for MetaStock is there for you to follow the activity of the smart money. And we only use 3 simple things to read the activity. Volume, spread or range of bar, that's the high and the low. Now, this could be a daily bar, so this could be a day's activity. It could be a 1-minute bar. But because the markets move on supply and demand, which is what we read, we will show you how to measure those imbalances as they're happening in any time frame and to trade in harmony with the bears or the bulls. Volume spread analysis. Activity, volume. Spread of bar, high and low, what the market did on that volume. Closing price, the result of all this activity. Here's the man that invented volume spread analysis. His name is Tom George Williams. He was born in February the 4th, 1929, and is standing right next to me as I record this video. Tom says, if you can read a chart correctly, you will understand the markets do not move randomly, but are moved by the smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in the volume and price. And then you have a chance, just a chance, to profit by following their footsteps. Volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release the true volume figures until the day after trading took place. I now bring in Tom Williams, the man that invented this, for a quick overview of what volume is, and then we're going to look at why the markets accumulate and distribute. Tom, welcome to this very special promotional video for Thomson Reuters, MetaStock and TraderGuider. We haven't got a lot of time, we've only got a few minutes. So in summary, you were a former insider, a syndicate trader that traded with a large fund in America. Please, in just 2 minutes, explain why volume is vital to the analysis of any trader or investor that wants to be successful.
Well, it's surprising the amount of ignorance there is in the whole world about volume. That's the vertical lines at the bottom of your chart. But, of course, volume, another word we use for volume, of course, is activity. And what you have to realize is that the so-called professional money are those traders that can throw in 5,000 or 6,000 contracts into the arena while they're trading. And it's that, those large amounts of activity or trading going on that alters the balance of supply and demand. And you can see it frequently happening all the time. And it's certainly very, very interesting for you. And once you learn to read, remember, a chart is a language speaking to you. And once you learn to read that language, you will never, ever look back, I can assure you. And it's very exciting as well.
Thank you very much indeed, Tom. Now, let's look at what is accumulation and distribution. It's buying and selling from the smart money in phases. And I'm about to show you how in MetaStock, in all versions, but in fact MetaStock 12, which has just been released, which is a great program, how we can identify accumulation and distribution by what we call the composite operator, or the smart money. The smart money move the markets, and it happens in phases. Markets do go up. They go down and they go sideways because everything is happening in phases, as I'll show you. Knowing what phase the market is in is key to your success. But when accumulation is underway, and then sell when distribution is underway, this is the key. You buy on accumulation and sell when distribution happens. Here is the phases of the market, compliments of the Stock Market Institute, which is an institute that taught the method of a trader called Richard Wyckoff. And Richard Wyckoff was the basis for everything we're going to show you in this plugin. But markets move in phases, and surprisingly, most traders don't understand that professional money buy low and they sell at higher prices. But you would be amazed how many retail traders don't understand that theory. When a market's being accumulated or bought, it will happen when ultra high volume or very high volume appears. When it is sold or distributed, it will happen when ultra high volume appears as the market rallies high. An example in point is what happened 12 months ago. In fact, a little bit further than that. I am filming this video on the 24th of October 2012. Distribution happened in the gold market last year. Accumulation happened in the stock markets around the world last year. But the news would have actually fooled you at the time, because gold was apparently the safe haven and stocks were everything to be avoided. As I look at the chart, and we'll show you in a minute, you can't buy something that's popular and do well, as Warren Buffett once said. So these are the basics of what the Smart Money Add-in study to MetaStock looks at. We look at what we call the basics of Wyckoff the Trader. And by the way, if you type that into Google, richardwyckoff.org, you'll find lots of information on this trader. And Wyckoff explained to us over 100 years ago that the markets moved on volume and price. Wyckoff then determined where risk and reward were optimal. Wyckoff studied the psychology of the market. Why do the smart money buy and sell at a certain time? Wyckoff explained the shifts between a weak holder, that's a loser, and a strong holder, which is a winner. We want you, Thomson Reuters, MetaStock and TraderGuider, want to make you a strong holder, a winner in the markets. And Wyckoff then told us that the markets were moved not by randomness, not by technical analysis, not by news, but by the trading of what he called the composite operator. Here's an example. Here is a TraderGuider chart, and we have programmed in indicators, as you'll see in a minute, into MetaStock 12 and 11 and previous versions, which you can now buy directly from MetaStock. You'll notice here, this is August 2011. Look at the volume here. We call this ultra high, massive, enormous, skyscraper. I use an affectionate term in my book, Yao Ming, because Yao Ming was a basketball player who's now retired for the Houston Rockets, who was 7'6". If this is a line of human beings, that's Yao Ming, and I'm about 6'2". That's me. That is massive volume, but it's on a down bar. The price is falling. The public are panicking. The US government's been downgraded. Everything's looking bad for the stock market, but what does it do? It goes up. So who are you? There are two participants in the market: the herd, who lose money, and the predators that make money. We will teach you to become a predatory trader, a trader who trades in harmony, not against the smart money. It's time for you to understand how the markets work. But the question is, are the markets being rigged? Are they manipulated? Well, let's look at a quick example and show you how now we can go straight to a chart and see it in action right now. Gold and silver have been very, very, very widely reported in the markets the last 12 months. If you're a trader, whether you trade commodities, stocks, futures, or Forex, doesn't matter. the VSA methodology will work for you. A year ago, you won't have seen this headline, many of you won't, because it wasn't publicly reported, as most stories aren't. But this is the truth. A former Goldman Sachs trader warned the CFTC in America that there was a serious manipulative event about to happen. But could you, as a trader, have known about that event in advance? And the answer is yes. In the email to the CFTC, Andrew Maguire, the trader, warns of what this event is going to be. I'm not going to read all of this to you now, because if you become a customer of ours, you will learn this setup. And the setup is simple. Be contrarian, read the chart, because it never lies. And last year, in 2011, what happened to the market? The truth is always in the chart. Gold collapsed in price from over $1,900 to $1,525. And the S&P, the Dow, the DAX, most of the major indexes that were apparently weak rallied and became strong. Gold hit a 6-month low, December 2011. That is a fact. Here, stocks hit an 8-month high in March of this year, in 2012. This is how the markets work, everyone, and this is what we're going to teach you with our study. So you buy when the news is bad. That's important, and you'll learn why we do that. And the truth is always there in the chart. Now, I'm going to look at a gold chart now in the latest version of MetaStock and show you something happening right now. This is the latest version, as you can see, of MetaStock 12. I've got a daily chart here, and underneath it, I've got a series of charts. So, a number of things that have happened recently with the new version of MetaStock. They've got a great new data feed called Icon. Absolute massive improvement. Something you should definitely look at. But here, we have now partnered with MetaStock to bring you the volume spread analysis system. Now, I'm not going to have time in this short video to show you all of this, but suffice to say, everything you're seeing here, here, and here is all the proprietary work of Tom Williams and TraderGuider. And we're bringing this to you to show you that this really will help you in your trading and investing. First of all, what do we notice about these charts? Well, let's look at the time frames first of all. Here, I have a 240-minute chart of gold running live as we speak. I then have a daily chart of gold just here. I then have an hourly chart of gold and a 15-minute chart of gold using MetaStock 12. Now, there's a number of things in the program that we're going to ask you to look for and teach you to look for. The first one is, are we in a bearish zone or a bullish zone? Here on the daily chart, you can see for the last several days, we at TraderGuider and MetaStock can determine gold is bearish. And we produce a bearish indicator. And the reason that gold is bearish is because of that bar right here. Now, I've put a black dot over it, and this is the active chart. Now, unlike most systems that produce indicators or signals, the VSA study for MetaStock goes one stage further. Because if we left click on this button, we get an explanation from the man that invented this, a former fund manager, how the market works. And we see that we have a signal called SOW. That means sign of weakness has appeared. Supply is coming into gold on the daily chart 4 weeks ago. And in fact, or a few weeks ago. And it says this is an up bar, showing an increase in volume, suggesting supply has entered this market. If volume is ultra high, this could be climactic. Background, look carefully. Do you have strength or weakness behind you? After a period of rising prices, which we'd had in gold, this could be the start of distribution by one or more professional groups. If the next bar is down, as it says here, it confirms the weakness. What do we see? The next bar closes down. We have confirmation that selling is happening into the up move on this narrow ranging bar. How do we trade it? We look to the smaller time frames. Do we then change behavior? Does the market turn bearish? Oh yes. Here we see the market changing behavior. This is the 4-hour chart of gold. And if we notice as the market's falling, we get indicators to short the market. And I don't have time to show all of these, but these are setups that we will teach you. If it's in a bear range and we see bearish indicators, we go short. We do not buy the market on green indicators in a bear move. This is nothing more than a retracement. Here, on this bar here, we can see on the 15-minute chart a setup that just appeared actually as we started filming. We're in a bear move. We can see a spike in the volume, and we see here the market's marked down, but behind us in these areas we're seeing as the market's going up and trying to become bullish, it turns bearish. And so in this bear area we have signs of weakness appearing. And again, you will be able to click on any of these indicators in the MetaStock program, and it will produce for you a description. All we then do is left click, and it tells us what the indicator is, why it's there, and why the market is at that point a weak market and not a strong market. We then use multiple time frames, and this is what you will learn when you become a customer of TraderGuider and MetaStock. And if you're an existing MetaStock user, this will assist you in looking at charts and knowing when to really buy or when to really sell. But the ironic part of the whole markets are the news will often wrong foot you and put you in a bad position, whereas we'll show you when you should actually be selling when the news is good, as in gold, and buying when the news is bad, just like the stock market was in August of last year. So on behalf of the entire team at Thomson Reuters MetaStock and TraderGuider Systems International, Gavin Holmes here, wishing you well. I hope you will become a customer of our companies, and if you're already a customer, we hope you'll give us a try. And a few final words from Tom Williams, who is the inventor of VSA. Tom, in a 1-minute nutshell, what will people learn from this brand new study that we've developed for MetaStock?
Well, I always say that the software that we've produced produces automatic signals, automatic indications of what we call either strength or weakness entering the market. And when you look at these automatic signals that appear without the intervention of any human being whatsoever, right, on your data feed, if you think that the signals are pretty good, or as I usually say, uncannily accurate, then what it means is that the information that we're telling you and we put in the program, we don't hold any secrets, we tell you everything that we know. Computers just don't understand mistakes in your thinking, mistakes in your logic. They just don't want to know. You've either got it right or you haven't. So if you think the signals are good, which I think you will think they're good, then the philosophy that we're teaching you must be correct. Otherwise, a computer will not understand it at all.
Thank you, Tom. So on behalf of Thomson Reuters MetaStock and TraderGuider Systems International, this is Gavin Holmes signing off, and I hope and trust that you'll try our 30-day free trial that we're offering. It's the only trial that we offer. It is completely free, and you can get it from going to the websites of Thomson Reuters MetaStock or TraderGuider, and we look forward then to you joining us for our live trading sessions, where we'll show you how we make money in the markets using the volume spread analysis smart money indicator for MetaStock 11, 12 and previous versions, and we look forward to seeing you. I wish you good trading, constant profits, and I look forward to connecting with you. Thank you and goodbye.